If you're planning on starting your business and you think that you need to be saving up money for months and months or risk your own savings because business funding is not available to brand new businesses, I want you to rethink that. And I'm about to show you the exact way to get at least $50,000 for your brand new business without any collateral, tax returns, or using a single dollar of your own savings. What is going on, my people? My name is Clarissa, and I currently run two businesses, a coaching program for credit and funding companies to learn how they can fund their own clients and scale their businesses with marketing systems, and a white label funding company where funding companies use my team to fund their own clients. So it's safe to say I'm a credible source for you to learn how to fund your business or your own clients. This video is specifically for those of you who are about to start a brand new business or just started one and you think that your only option is to drain your own saving account or taking personal debt. Now, I'm going to show you a funding strategy that most entrepreneurs have never heard of, but it's how smart business owners actually get capital without risking their personal finances. The biggest lie that keeps entrepreneurs from starting or delays their start, and that is that you need to use your own money to start a business. I see it all the time. People drain their 401k, max out personal credit cards, or just spend years saving up $20,000 to $30,000 just to get started. But here's what really is happening: is that while you're saving up your own money, your competitors are accessing $50,000 to $150,000 in business funding and getting a massive head start. They're buying inventory, hiring employees, running ads, and scaling while you're still trying to save up enough to actually get started. And the truth is that banks and credit companies have billions of dollars they need to lend out. And they make money when they lend money. But most entrepreneurs never learn how to position themselves to get access to this type of capital, and they think that they need years in business, perfect credit, or a ton of collateral in order to get approved. And that's not true. There is a specific type of funding that is designed for brand new businesses, and I'm about to show you exactly how it works. The funding strategy that I'm talking about, it's 0% business credit cards. And these are credit cards issued to your business that come with a 8 to 12 months of 0% interest. So that means that you can access $50,000 to $150,000 and pay zero in interest for over a year. Now, here is what makes this so powerful for brand new businesses, is that the business credit cards don't require business tax returns because new businesses don't have them yet. They don't require collateral because they're unsecured credit lines. And they don't require you to risk your personal assets because they're issued to your business entity. But here is the key. They do require a strong personal credit profile because banks use your personal credit to determine your credit worthiness for your business funding. And this is where most people get stuck because they think that their personal credit is not good enough, or they don't know how to analyze in order to know if it's good or not. And then they don't know how to optimize if they do identify that it's not good. Now, the reality is that if you have a 700 plus credit score, you can qualify for business credit cards. And if your score is lower than that, there are specific strategies to get it where it needs to be in the next couple of months. Now, you can't just walk into a bank with a business idea and expect them to give you $50,000. You will need to have your business properly structured. But this is way easier than most people think. First, you're obviously going to need a legal business entity, LLC or a corporation. But before you go ahead and open it, you should be buying a domain with your business name. Then go to Gmail and create a domain branded email. Then buy a second phone number from Google Voice and a business address from anytimemailbox.com. Then you can go to websites like Busy and create your LLC. This will take about 10 minutes online. It's stupid simple and you can't really get it wrong. But it's important that you get a branded email, address, and domain before you file the LLC. And this way, when banks look up your business, everything matches and looks professional from day one. Second, you need to have an EIN number, and you can get this completely for free from the irs.gov website, and it only takes about 5 minutes. Thirdly, and this is where most people mess up, you need to have a business checking account with some activity. Banks want to see that you're running a real business, not just trying to get a quick access to credit. But here's the thing. You don't need massive revenue or years or history. You just need consistent, predictable activity. So I've seen clients getting approved for 50,000 business credit cards with just businesses that were open for only 2 to 3 months, as long as they have the right structure and approach. And the key is to show the banks that you're serious about building a legitimate business and not just trying to access credit. Now, before we get into the application process, let's talk about what is the perfect credit profile and how it should look like if you want to get approved for this business credit cards. So first, you're obviously going to need a 700 plus credit score because this will put you into the good to excellent range that banks love to see and trust. Second, you should have between 5 to 10 accounts open on your credit report. This will ensure that you have a good credit mix. So it should be some credit cards, some should be installment loans, and this basically shows banks that you can handle different types of credit responsibly. Third, you should have at least one credit card with a 10,000 personal limit. This will show the banks that you can handle larger credit lines and makes them more comfortable with giving you bigger business limits. Now, fourth, you should have no more than 3 inquiries in the past 6 months. Too many inquiries basically signals that you're desperate for credit, which is a red flag for the lenders. Fifth, you should have around 10% of utilization across your cards, not 30, but 10. Okay, this shows you're using it responsibly without maxing out all your accounts. And finally, no derogatory marks. So no late payments, no collections, no charge-offs. Your payment history needs to be spotless. Now, if you don't check all these boxes, don't worry. You can check out my community where we show you how to optimize each one of these aspects so that you can be ready for funding. If your profile does look like this, then you're ready for the application process. Now, here's where the magic happens. How do you actually apply for these credit cards? Most people just fill out the application online and hope for the best, but that's a recipe for getting denied or approved for tiny limits. The smart approach is building banking relationship first. So you want to open your business checking account with the bank that also offers business credit cards and that you're planning to apply for. But that you will need to let that relationship season for 30 to 60 days with regular deposits and activity. So we want to see money coming in and money coming out from that account. Okay. And when you are applying for the business credit cards, you're not just another online application. You're an existing customer with a banking relationship. And this will dramatically increases your approval odds and credit line that they will give you. So here is a pro tip. Apply in person or over the phone with a business banker, not online. Because when you apply online, you're just a number in their system. But when you're applying with a banker who can see your account history and your business activity, they can advocate for yourself and push for higher approvals. Now, the goal is to get approved for 2 to 3 business credit cards with an average of 15 to 25,000 limits each. And that will get you between 50 to 75,000 in total credit limits, all at 0% for the first 18 months. Now, here, there are many banks that you can go to get approved, but this is the evergreen funding sequence that I shared with my group that I have seen work best with almost any profile. So the first bank that you're going to apply for, and you're only going to apply for this one first if you already have a personal relationship with them, and that is Amex. Because if you already are a customer, then they will not give you a hard inquiry for applying. And if you do not have a personal credit card with them already, then the first bank that you're going to apply for is Citizens, which will do a soft pull on Experian. Then US Bank, which will pull from TransUnion. And if you didn't apply for Amex at first, then the last bank that you're going to go for is Chase, which it will pull from Experian. Now, the sequence is one thing, but knowing the data points is the next biggest piece for this to work, which is why I give all my data points for maximal approval odds inside of my community. Now, I want to point out one thing that we have been recently seeing is that, yes, you want to open bank accounts, but you don't want to open too many. So I recommend to opening only up to 2 accounts, because now banks are also noticing that trend of people opening too many accounts and using it as a strategy to be able to get approved for credit cards, and they're actually denying because of that reason. So make sure that you're not opening more than 2 accounts. Okay. Now, getting approved for the business credit cards is just one step. How you use this funding determines whether your business succeeds or fail. And this is not free money. It's a tool that needs to be used strategically, right? So the best use for 0% business credit card is for cash flow, for growth and investment, inventory, equipment, marketing, hiring employees, and things that generate revenue and help you grow your business. The worst use is for personal expenses and things that don't generate a return. So here is the key. You need to have a plan to pay this back before the 0% interest period ends. That means that your business needs to generate enough cash flow to make the payments. So, or you need to have a strategy to refinance it into longer term financing, which we can show you inside of our community. But when used correctly, this funding strategy can be the difference between spending years trying to save up money to start the business and launching it immediately with the capital that you need to succeed. Look, starting a business is risky enough without having to risk your personal savings as well. Smart entrepreneurs use other people's money to build their businesses, and 0% interest business credit cards that are one of the best way to actually do that. You don't need to drain your 401k, max out your personal credit cards, or spend years saving up money. You just need to know how to position yourself for business funding and apply the right way. Now, if you want to learn how to actually deliver funding as a service, meaning how to onboard clients, review their credit profile, build the funding game plan, know which banks and cards to use in each state, optimize personal and business credit, and apply for funding for yourself or your clients, then I highly recommend you joining our Funders Academy. This is a community full of funders just like yourself who want to add funding as a service and scale their businesses. It's only $99 a month, and the link is in the description. I hope this video was helpful, and I will see you in the next one.